Welcome to the second of the Elite Traders series on the Trade Journal. We'll do the disclaimer first. The content of this presentation or any other Elite Traders Club materials does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. Before making or investing decisions based on the general advice presented in any of the following presentations, you must consider whether the advice is appropriate in line of your financial circumstances or seek further advice on its appropriateness. You can pause and read the rest, and we will move forward. Today we are talking about the reward to risk calculator, the position sizing calculator, the journal page, and we'll go through the life cycle of a trade from a pending order to a closed order, so you can have a look at all those. So let's have a look at our trade journal and starting with the reward to risk calculator, which is the third tab down the bottom. Very handy. Once you get through your shortlist, you've got a couple of trades and you can't separate them, you can use a reward to risk calculator to get a couple of figures that might help you make your decision. So fairly simple. We just put the code in up here, the direction of the trade along in this case, the entry price, our stop loss price, and the ATR distance. Now that's one ATR, and that's from beyond charts to 21 period ATR on there. Once you fill that out, the blue cells down here will populate themselves, and they'll give you a number of various pieces of information. So you can compare AZJ, which is an Australian stock, with a couple of, in this case, a couple of American stocks with quite large differentials in the actual prices. First of all, you'll get a list of where your 1-to-1, 2-to-1 and 3-to-1 targets, reward to risk targets are. You'll get a listing of the multiplier for the average true range at each of those reward to risk. Now obviously on this first one here we have our stop loss exactly at 2 ATRs away, so it's close as we can get it on there. And the third column gives us the percentage increase in price required to reach a 1-to-1 reward to risk, a 2-to-1 reward to risk, and a 3-to-1 reward to risk. So how do we use this information? So once we've put in the three stocks, in this case that we are comparing, you can see that they've all got the same value as far as the ATR required to reach 1-to-1. So we've done a good job of finding stocks and getting our stop loss nice and close. The difference comes on the percentage increase required to reach the 1-to-1 reward to risk target. So you can see 8.7% is required on the first stock, 6.4% on the second, and 7.3% on the third. So you would choose, all other things being equal, the second stock because of the smaller percentage increase required in price to reach our first target. The ATR values are the same, so the only differential is in this. If the ATR values were different, so if you had, say, 3 ATRs here, you would have to take that into account on this. But generally, the lower the value, the better on this one. You can clear these entries either by just typing over them, or there's a clear all button up the top right-hand corner of the page. So once you've chosen your stock, we now move to the position sizing calculator. You will have populated this with your trading costs up here for Australia and for overseas shares, which normally translates to USA. Contract sizes here only relates to if you're trading FX. Financing costs relates to if you're trading CFDs, which a lot of people are. And as we mentioned in the previous video up here, as part of the financing rates, you have to enter the rates for each country's reserve or federal bank, their central bank's rates. If you're not sure where to get those, you'll see a link up here to globalrates.com, and you can get the rates on their website and update them. The notional trading capital is a populated cell, so you don't need to do anything with that. That will populate itself. The first cell you'll be doing anything in if you're trading Australian shares is selecting the direction of the trade. In this case, it's a long trade. The financing rate will populate itself. The risk percentage per trade, we said we'd have a 1% risk per trade in our trading plan on the journal summary page. You can fill this out. It doesn't populate through from the journal summary page. You can alter this if you wanted to, but we'll go with 1%. And I've just, as an example, used the previous trade setup for AZJ on here with an entry price of 5.39 and a stop loss of 4.92. Now you notice I've put 47 in here. This says stop distance, not stop level. CPS stands for cents per share. So what the system is asking for is, what is the difference between my entry price and my stop loss? In this case, it's 47 cents. Currency rate is 1 to 1. We can't change that. That's a populated cell. Obviously, if we're trading Australian shares, the conversion will be 1 to 1 on there. The system then does a preliminary calculation. We ignore that. We come down to the costs included position sizing calculation. This will give us a couple of numbers we need for the trading journal. First one, the big one, is position size. 862 is the number of shares we would trade if we're risking 1%, $500 on this trade. And your initial VAR here of $490 is just under the 500 on there. And that's a cost included, that's in other words, a net position sizing calculation. US shares, similar sort of situation on here. You enter in the security domicile, which is US dollars. You've got a selection of different ones on there. Direction of the trade, risk per trade, comes to the same amount, of course. Our entry price, the difference between the entry price and the stop loss is $4.06, but we just entered this as whole numbers, 406. The conversion rate is approximately 77.5 cents at the moment on there, so we just put that in there. And once we've done that, that will tell us, in this case, we'll be getting 84 shares, and our risk on this trade is $495. And when you're ready to do the next calculation, you just type in the values over these ones on here, and that will calculate. No need to save them. Once you've got your values, you then go to the next page, which is a trade journal page, where we record that information. So lots of cells across here. Don't get daunted by this page. It's quite easy to use. It's pretty much just a straight recording page. There are a couple of calculating cells on here, and I'll point those out to you. If you're not sure what to do on any of these, just hover over the heading and a little help box will pop up telling you what you need to do. If it is a calculated cell, it'll say calculated. In other words, you don't need to do anything. The system will calculate reward to risk, or whatever, profit and loss, whatever it is, the system will do that for you. So we have a couple of pending orders in the system. It's very important that you update this as you're going along. Put the correct information on here. This is linked to a number of other pages within the trade journal, so you do need to keep it up to date. So putting our pending order for AZJ, it's a long, it's an Australian share. We're using a 3 trends model trading strategy. We don't have an open date at this stage. Scale end date is if we have multiple entries on the same security. Number of shares. Tick size, as the little box up the top says, this is always 1 for shares. Our initial dollars at risk on here, the entry price, our stop loss, our first target on there, and the system will now calculate a reward to risk. As we move across on here, you've got allowance here for 2 exits. So if you halve your orders, if you're scaling out, you have exit date 1 and exit price 1, exit date 2 and exit price 2. And if you do exit half the order, you'll see there's a closed half option on here. And then when you close the second half of the order, you would use the final closed on there. Let's go back where we were. Commission in and commission out. Financing, if you are entering financing costs on a trade-by-trade basis, this is where you enter that data. Must complete this box. If you're trading Australian shares, the conversion rate is 1:1. If you're trading US shares, at the moment it's 77.5. Profit and loss is a calculated cell on there. Let's move across a bit further. Actual reward to risk is calculated. So once again, once you've completed the trade, and I'll go through this in a minute, this will calculate that for you. Trading stop. It's got a number of different options on there, up to 5 different trail stops you can have. As you trail a stop, the system will work out your value at risk on each trade, and that feeds through to the portfolio management page. You can trail your target, I should say. There. Allowance to include dividends on there if you have 2 dividends, and very last column is to select the reason you exited the trade. So that's the trade journal. The only difference between the Australian and US shares on there is you will be putting in USA equities on this one. You put the prices in US dollars for your entries, your stop losses and exits. This will convert it back to Australian dollars in calculations for the summary pages and the portfolio management pages. So that's how you put in pending orders. Let's go through the life cycle of a trade now as we progress from a pending order to an open order. We just change this. So it is critical you keep this up to date because this does update the portfolio management page, which we'll cover in the next webinar on this. Critical you do that and keep that up to date. The date, which might be the 15th of June that you enter the trade. And that's all you need to do for now. Once you've done this, just leave it like that until it's time to trail your stop. And we'll move across, right across here. And we had our first stop was at 4.92. Let's say we've moved our stop up now to $5.15. Once I put that in there, the system calculates my value at risk at the new level. In this case, it's $231, so down from $499 to $231. Trade's going really well. It's time to trail our stop again. And this time we're up to $5.56. No figure in here. It's because we entered at a price below this, so there is no dollar at risk figure on this trade anymore. So you won't get any calculations there. Trade's gone nicely. We've just exited, so we change this now to closed. There. Our exit date. Let's say it's the 16th of June. It was a very fast trade. And the exit price was $6.27. And if we scroll across here, you'll see the profit figure has been worked out, $846, and our reward to risk is 1.9 to 1. There. And now just the final thing to do on here is to go across the very last column, and the exit reason was it hit our trailed stop. That was the reason for our exit. And that's the end of that trade for that particular security. You have your record here. This will feed through to the journal summary page. You can see our results in here. It's not very exciting with just one trade, but that will build up, of course. And the position sizing calculator, we now have a profit here, so that is automatically adjusted, and the amount at risk at 1% is now $508 instead of $500, which it was initially. So that's how we treat the trades on there. Hope that was helpful. If If you have any questions about how this works, you're welcome to give us a call. Next week, we'll go through the Portfolio Management tab and the Equity Curve tab in quite some detail, show you how to use those, and look forward to talking to you then. Thank you. Bye.